Session over in the US overnight, we did see the US stock market down by 0.7%, but it was all about the US futures today, and we did see the S&P 500 futures up by 0.4%. So in the end, the Australian market managing to end in the black. In terms of sectors, it was the materials space which was once again an outperformer. And if we have a look at this space, we've seen production reports this week from Rio Tinto, Mount Gibson, and it does show that iron ore miners are making the most in terms of production at a time when iron ore prices are relatively high. So those iron ore miners once again doing quite well. We also saw the healthcare space outperforming and the industrial space. Altogether, our market, though, seeming to shrug off those worries about the US debt ceiling. In the month to date, we're actually up by 1%. So since the US shutdown began on the 1st of October, we've actually managed a rise. So while the day-to-day gyrations are a little bit uncomfortable, overall, we haven't seen a huge reaction. We saw some stunning performances by individual stocks today, and one worth mentioning is Xero. This is a cloud accounting services company, and if we have a look at the stock, it's up a massive 341% since it floated less than a year ago. Today, the stock up by 8.7%, reaching an all-time record high. We also saw Forex, which of course debuted not too long ago, up by 2.8%. It debuted at $2. That was the IPO price. Today it reached a high of $2.87. And also some standout performers were some of the smaller caps that we often cover on Your Money or Call, like Nearmaps as well as Mint Wireless, both of these stocks reaching a high. We also saw Divine as well as Crown reaching a high. On the flip side though, Webjet continues to underperform. That one reached a 52-week low, as did Paladin. But altogether, a pretty fantastic day on the Australian share market, but on extremely light volumes.
This possibility, particularly when you have such a vocal minority group, a seemingly powerful one, such as the Tea Party, seemingly willing to go beyond the debt ceiling, and yet we see markets taking it to, like our own market today, taking it seemingly within their stride.
Absolutely, and the market's really not reacting, and I guess it's not a huge concern of markets. A very small probability that it is going to turn into a huge problem. We've already seen the debt ceiling being raised 74 times since 1962. And I guess if we do look at what happens if an agreement is not reached by the 17th of October, well, it doesn't mean the US runs out of money. It just means that it can't borrow more. It'll still have revenues coming in the form of things like tax revenues. So it will be able to pay its bills. It just won't be able to borrow in order to pay its bills. So I think for markets, it's a question of if the US debt ceiling is not raised. It's a question of when the US will pay its bills rather than if. But of course, overnight we did see Fitch putting a negative watch on that AAA rating of the US. So just monitoring very carefully. But at this stage, I think the market's still the base case scenario that it's not going to turn into a big deal, that the US is going to pay its debt, just a question of...
As I mentioned, we're going to be talking about the US issues throughout the hour, so I want to move on to some of the more domestic issues. And Julia, production updates today tale of two different stories. Mount Gibson and also Iluka. Mount Gibson looking pretty good. Well, certainly the share price reaction was.
And I guess when we look across the commodity space, there are areas that are looking relatively healthy, and there are areas like iron ore, copper's not looking too bad either. And then you have areas that are looking absolutely horrible, and that's still the mineral sands area. In terms of pricing, titanium dioxide coming under a lot of pressure, as well as things like coking coal still under a lot of pressure. And really some of those production reports coming out highlighting the differences there. On one hand, we've seen Mount Gibson with a fantastic performance. In fact, since iron ore prices bottomed this year in June, we've actually seen Mount Gibson iron up a massive 50% in a number of months. And today, that first quarter production report, we've seen why. Production very strong, 2.6 million tonnes. That's actually up 47%. So they've seen an increase in output from their Kulan Island project. And of course, pricing has stayed relatively firm. So Mount Gibson just coming up to reaffirm that 9 to 9.5 million tonnes guidance, but that was enough to see the stock pop. We have a look at Iluka, though, a very different scenario. Now, their update was quite bearish. They're saying that zircon demand still remains subdued, and I guess in the full year numbers what we had seen is that zircon demand had started to show some signs of recovery, but it does look like fragile business confidence really weighing there. And in terms of titanium dioxide, this is where things looked extremely bearish. I mean, rutile, we saw prices down at $1,200 US a tonne. Synthetic rutile, there was none produced in that third quarter. quarter, and I guess if we have a look at the total mineral sands output, down by 30%. Now that's because Iluka does have a little bit of control over the market, so if it does stop producing, hopefully that will help prices. But in terms of revenue, that's a bad news story. In the year to date, down by 40%.